Hey everybody, this is Jim at SP500chart.com, where we're going to use some time-honored techniques to try to understand these modern markets. This is one of our featured daily technical analysis videos of the S&P 500 index. It's been almost, not quite, about a month shy of 2 years. Is that it? 2 years? No, 3 years since I first started doing this. And with the YouTube video, but I'll let you know when that anniversary actually happens. Before we take a look at what happened today, I just need to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. Well, we're starting out looking at a 15-minute chart, and I want to show you a couple things. First off, we've got our neckline from our head and shoulders top. This is our target. You know how we measure that. You take the height of the head and place that at the spot of where the breakdown took place underneath this line, and that becomes your minimum target. We got a little more than that. Then we formed a sort of an inverted head and shoulders pattern down here that's got two heads. You might think it's got two heads, therefore it's double strength. Not really the case. As a matter of fact, John McGee states that the more complex the head and shoulders or inverted head and shoulders is, the less dramatic the results tend to be. So if you have a nicely formed big head and shoulders top and it breaks down, boom, they usually work out very well. If you've got one that's got two left shoulders and two heads and two right shoulders, when it breaks down, they tend to wander around more. So anyway, here's the deal. We started out today pretty much right on cue with what I was thinking would take place, and that is we would see a day of follow-through buying, but I think the events in Syria created too much noise for the market to handle. So we had an afternoon sell-off. Now, we have not reached the minimum expected target of about 1674 from this small pattern. So that's still on the table. I'm just gonna do it by the book. That is still on the table. This pullback that we saw today, and if we take a little bit closer look at it, you can see that there was a little backing up, and then it almost looked like this wanted to make a bull flag, but then it just, I guess I was on the road in the afternoon. I had to run over to the University of Georgia and do some work over there, but I'm assuming this coincided perhaps with remarks by John Kerry or something to that effect. So we have this big candle down, and frankly guys, I think we look for a bounce. I think we look for this neckline and we say it should bounce there. And I think even though we're not dealing in large moves that have a lot of technical significance, I think that's the way it should be played. If we look at this on an even smaller time frame, on a 2-minute time frame, you could see we came down pretty hard to about 1656, which, by the way, is almost exactly the same level where the breakout initially took place. So a person might say, well, maybe that's going to be the extent of the selling. Well, maybe, but if we sell down any further, then I would expect to get picked up around 1654. As we look at the last 4 days of trading, We can see if there's any kind of channel that might be developing. It's a little hard to do that here because we've got this volatility that is just creating a good bit of noise. So let's just do the best we can and say maybe going forward we look at this as being a resistance line. And now for jollies, let's make a parallel line and see how that might line up if we go back to these lows back on the 21st. Well, what a coincidence. So maybe we bounce here. If the S&P is in a parallel channel mode, maybe we don't even get back down to this neckline. But if we do, I don't think that would be the end of the world. I would look for a bounce and then getting back to the task of moving the S&P up to about 1674. So guys, that's your video. That's it for August 26, 2013. We'll see tomorrow how things work out. We'll see if the market is able to absorb the what is going on over in Syria, and we'll just take it on a day-by-day basis as we always do. But for right now, I'm going to read the chart, and I'm not going to listen to the news that much. I'm going to stick with the chart, because if a person had stuck with the chart over the past 5.5 years, excuse me, 4.5 years, they would have done quite well. And that would have, and let me amend that statement. If someone had stuck with the chart and ignored the news, they would have done well. So let's ignore the news, stick with the chart, and hopefully going forward, we'll do well. Thanks for watching. Take care.